So we are live. I think we got a few people in the room already. How's everybody? Can everyone hear us okay? I know that it's going to be a bit of delay there. Sorry. I'm going to stop that slide. Probably had to... No, I might just... I probably had to stop there. I think we probably just let people to see us first. Yeah, okay. Okay. So can anyone hear us okay? Can you see us? Because I know that there are some people in the room already. Yeah.
So I go chat to see everyone, or okay, see everybody. Cool.
Oh yeah, good evening, Dex. Yeah, and yeah, awesome. Okay, right. Okay. So good evening, everybody, and welcome to tonight's webinar, How to Protect Your Property Purchasing Power. I think we all know that it's very important that, because if you want to do the property investment, you need to make sure that you have a property purchasing power. So tonight, Hans is going to, share with you that how you're going to protect it. Yeah, okay. So for some of you that, are new to us, that if you haven't heard about me before, my name is Lucias, and I'm a property investment mentor, financial advisor, and founder of finance mortgages and insurance. Yeah, and also I'm the author of the this book called Financial Freedom 5 Steps, 5 Years. Yeah, so basically it's my personal story that when I from living in a stay house and managing $170 a week after we pay the rent until later on that in short 5 years able to build a $17 million property portfolio. So it's a great book. And for some of you, you are wondering preparing some Christmas present, for friends or families. That might be something that you can look into it. Yeah. So I will post our website's detail there where you can actually make a purchase or something. So tonight joining us is our insurance advisor, Hans. So Hans actually was, before joining us, he was ASB insurance manager. So after I left ASB, Hans and also another person took over my insurance portfolio and looking after customer from there. So that's how we got to know each other. So I'm going to pass on to Hans. And if you have any questions, you can either leave it in a chat box. So Hans is going to just, do a presentation, and right at the end, he will answer your questions. Also, I think there's a button there that you can raise a hand asking to speak. So if you are doing that, we can bring you to the presenters panel. So that means that you will go through the testing your audios and videos. Yeah. So just make sure that you are prepared, because we will be able to see you if you raise your hand to speak. Otherwise, you can always feel welcome to put your questions in the chat box. Yeah. Okay. All right. Let's welcome Hans. Okay.
Thanks, Ben. We'll start the presentation now. Get started. Can you guys all see the slides fine? How to protect your property purchasing power?
Yeah, I think that's fine. Yeah, you can get going. Yeah.
I'll just do a quick introduction about myself. So my name is Hans. Came to New Zealand when I was 18 years ago. Gives my age away as well. Chinese, speaks English, Mandarin, can sort of hold a conversation in Canto if need to be. I graduated from University of Auckland with a Bachelor of Commerce degree, as well as a certificate of financial services. Right after that, I actually worked at ASB for 5 years. So I started as a teller, moved down to a personal banker role, lending specialist. And then I was a mobile insurance manager for 4 years. So what got me into the job is basically when I started doing home loans, I started seeing some real life stories about what happens when customers couldn't make their mortgage repayments. Their beloved house had to be mortgaged sold. And that was quite sad for me as well, as a person who gave them the loans. That's when I realized the importance of insurances, risk insurances. And during my 4 years as an insurance manager at ASP Bank, I actually managed to help more than 1,000 families with their protection plans. So I do have a wealth of knowledge in that field. I was also the #1 overall rated insurance manager in the bank. Not #1 overall rated doesn't really mean all sales. So we had a lot of metrics like we had quality of assurance, quality of statement of advice, customers' feedbacks, voice of customers, retention of customers. So yeah. And there are my contact details. There's my phone number, my email address, and my WeChat if you have to. Yeah, if you have any questions, please do contact me. I'm very approachable to say the least. Yeah. Cool. And these are the 5 major companies that we work with. So we have Partners Life, AIA, Fidelity, Cigna, and NIB. So we did our research, and those 5 companies are the ones with the best financial rating, which simply put, they have money to pay for your claims, as well as having the best claims rate at more than 90%. Obviously, for my customers, I want to, no matter how much you pay for your insurance premiums, end of the day, when it comes to claim time, I do want that assurance that your claims will be paid. That's why we are representing the biggest insurance companies out there. Cool. Not sure if you've seen this before. If you have been following Lucia's programs, workshops, you should have seen this a lot. So basically, this is Lucia's vision. So top of the pyramid is your lifestyle. So this lifestyle will probably be your Ferraris, your jet skis, your holidays, your endless holidays, your multi-million dollar investment properties. That's where you want to be. Your financial freedom. Obviously, in order to achieve that top of the hierarchy, it has to be done via investments. Unless you're born with the gold spoon in your mouth. Obviously, with the investments, most of us, we will be looking at property investments, following Lucia's strategy. And in order for that property investments, we have to leverage through borrowing and insurances. Obviously, you will have to borrow money from the bank for lending, for developments. And with that borrowing comes with great risks as well. So if anything happens to you, if you couldn't make the repayments, obviously we don't want the houses or developments to be stagnated by that. So that's why we provide you a safety net with the insurances. So simply put, borrowing and insurances are the foundations of your dream lifestyle, that financial freedom. And here's a chart that breaks it down even better. So this is Lucia's vision. Obviously, we have to start from the bottom, right? Like Lucia did, a state house. So renting, we start with renting, and then eventually we move into our first home, and hopefully we can start our investments with 1 or 2 investment properties, and gradually we can build a small portfolio, and then your fancy cars, your Ferraris, your jet skis, and everything will come. Then that leads to financial freedom. So basically, insurance is what helps us basically provide a safety net. So if anything unforeseen happens in life, obviously, I'm sure everyone knows, like COVID-19 this year was unprecedented. So no one would have seen it coming. So basically, if any life were to throw us a curveball, last thing we want is to stagnate our process or even bring us back. So obviously, you say if you had a small portfolio of investment properties, then if you couldn't work anymore, obviously you'll be looking to sell some of those properties off, and chances are you'll be rushing to sell because of the lack of income and things like that. And we don't want that to happen because I'm sure those investments were hard earned. What sort of insurances can we help you with? When we think about insurances, I think most of us will think car insurance, contents, house. Obviously, there are essential items as well. But a lot of times we tend to overlook things. If you think about it, those insurances actually covering an amount, is a dollar amount. So basically, those things are worth, how much is your car worth? 10,000, 20,000. So there's a dollar figure to it. Well, yourself, I think we're all priceless, right? We can't. That's why I think protecting yourself is more important than protecting those assets, because you're the ones who got those assets. Yeah. So if we look at personal risk insurances, we'll be looking at things like life insurance. So life insurance is a lump sum payout in case of passing away and having terminal illness. So this would help people out, say, to pay out their mortgage, to leave a legacy behind for their kids, to leave some money behind for parents and things like that. And next cover, we have trauma cover, so also known as critical conditions cover. So this is things like cancer, heart attack, stroke. Basically, this day and age, chances are you will survive after those bad conditions, but it's just you're never going to be the same person again. So basically, this lump sum payment helps you out with recovery, or even taking some of the your life boxes off. Because end of the day, I think stress is what worsens a lot of the conditions. And if we have money in our account, I'm sure we'll have less stress, surely. And next event, we have income protection. So income protection is a monthly benefit that gets paid into your account if you couldn't work due to any illness or injuries. So that helps you with your mortgage payments and bills and things like that. Next event, we have permanent disablement. So this is a lump sum payout as well. So this is a disablement where you couldn't do your own job anymore. So obviously you'll be home, won't be able to work, do the same job. So this helps with your mortgage rate, to paying your mortgage off. Next, we have redundancy cover. I think this really came to everyone's mind, especially this year. We've never seen so many people made redundant before due to COVID-19. So this helps out with 6 months of monthly pay if you were to be made redundant. Last event will be health cover. So in New Zealand, we are actually quite lucky. Our public health system is actually really superior compared to a lot of other countries. But the only problem is the wait queue gets a bit too long at times. So if you do have the extra money in your bank account, you can opt to have your own private health cover where you get admitted to your private hospital of your choice. Obviously, better treatments, better hospitalizations, faster admission as well. That's what we want if we were to suffer an illness, right? Cool. And not only personal risk insurances, we can also offer business risk insurances for those self-employed people or business owners. We have key person where we provide a capital injection upon the death, terminal illness, or long-term disability of a key employee or sole trader. Obviously, it's to keep the business going. Then we have shareholder protection. So that is to fund the business buy and sell agreement commitments for a business owner resulting from the death, terminal illness, or long-term disability. And lastly, we have group scheme. Group scheme basically is an employee benefit where everyone in the company gets, say, life insurance or health insurance paid for by the employer. Cool. So just to give you guys a basic understanding of all the insurance that we can offer. And for those who currently have insurances, especially taken long time ago, it's good that you have that sense of insurance in you. I'm so glad. You're in the right channel as well. But this is just to make sure to see, are you actually overinsured or underinsured, or do you actually have the exact right cover for yourself? Because overinsurance obviously could lead to paying way too much for your premiums. That stagnates your goal of investments as well, because obviously that means less money saved while covering too much. And worse of all, actually reduces your borrowing power, because overinsurance, obviously insurance is still outgoing. So when we do a home loan application, we look at your income and outgoings. Obviously, the more outgoings you have, the less money that you can borrow. So that could bring you back a bit as well. And then we have underinsurance. Underinsurance will be a lot of times, I think, due to inflation, people don't understand how much things go up by. So covers taken out 10 years ago, if you don't get reviewed, chances are you won't be insured for the right amount anymore. So that's a waste of money, because if you were to make a claim and then the sum insured is not right, it doesn't cover your goal of why you bought insurances. It is a waste of money in a way. But I will explain these further with some case studies, with some customer real life events that I saw recently, and a few customers I saw and how I helped them. Cool. I'm sure you guys have been waiting for this. How to protect your purchasing power. I think nowadays a lot of our buyers are first home buyers or potentially buying their first investment property. I think these people are at the most risk in terms of having to protect their purchasing power, just because basically the bank actually gave you the loan because of your ability to earn an income. If you couldn't earn income, not only can you not get the loans, also that means you cannot support your mortgage repayments or even survive in Auckland, basically, because things are pretty expensive these days. So that's why it's important to protect your purchasing power, protect your ability to make an income. Some first home buyers are, say, 25 years old, going to be making an average of 100,000 in their life, 100,000 salary annually in their lifetime. And they have, say, 40 years until retirement. If you think about it, that's $4 million. That's a lot of money. So that is your ability to make an income, generate income. That's how you got your fancy cars, your loans, your PlayStations and things like that. We want to help you protect that. So that's where income protection comes in, where the income protection pays you a monthly benefit if you couldn't work due to any illness or injuries. And like I said in the beginning, if you had income protection and if you couldn't work, you're off work, couldn't make your mortgage repayments, go into the bank and tell them that, look, I have income protection, money is coming in 8 weeks' time because of like wait period. No one's gonna try to mortgage sell your property. So your biggest purchase, most valuable purchase of that house will be safe. Because I think for people need to understand that we don't only need insurances because we're going to die, but because we're going to live and not become anyone's liability. And second most event will be passing away. A lot of times when we buy houses, I think the loan's taken out by joint ownership, partners, couples, yeah. So basically, if we were to lose one person, basically one person, then the other person will be under a lot of financial stress. Not only do they have to take care of the mortgage repayments, they were only given that mortgage because of joint ownership and joint income. So obviously losing one hurts in a big way. And also, obviously, if someone had life insurance, the mortgage should just be paid off for the other half. And especially when they have kids, I think helps in a big way. Because if you think about it, I think rent is the biggest outgoings in Auckland right now. Cool. And these are some real life examples. So these actually all happened within the last 2 years. Not sure if anyone recall. But basically, first picture happened in Botany, where basically a dad was killed in a car accident, just waiting at the traffic lights, and I think the young man was under something and then didn't brake and basically ran into him, passed away straight away on the spot. Second event happened recently, where Auckland father passed away in Alba Park suddenly. This was 1 month after the wife gave birth as well, so left behind 2 kids. When I hear those news, obviously my most sincere it goes to the family. But then a lot of times when I think about it, I actually the first thing I think about is whether they have insurance or not, because obviously that plays a major factor in the upcoming events of the families. Cool. So first event, Alan passed away in Botany. I don't think he had any covers. We actually did a fundraiser. I donated some money as well. We ended up donating, giving 200,000 for the family. Obviously, 200,000, it is a lot of money. But this day and age, I'm sure most of our mortgages are bigger than that. So if Alan had life insurance, I'm sure things will be a lot different for the family. Next event happened in Alba Park, where the young man in his 30s passed away, leaving 2 kids. When I first saw the news on social media, I actually said that the guy didn't have any life insurance. We also did a fundraiser, but it was still sad because we know recently he bought his house, so we know the mortgage wasn't going to be small. But then after a week, I was so relieved to find out on the news that the man actually bought life insurance. So he was very responsible for the family as well. So the mortgage is now all paid off. Obviously, the family is still under a lot of grief, but now at least we know, they won't be under any financial stress. Yeah. Cool. So these are some of the cases. Oh, Daniel. Okay, I'll quickly answer those questions after. Yeah. Just got a couple more slides, and then we'll go into the questions and answer section. Cool. So I had a customer last month where a customer was paying $8,500 for their family insurance package, and that was through 5 different providers. And basically, I sat down with them, took 2 hours to explain what the current cover is all covered for. And then after going through their goals and section, we realized that they're way overinsured because they're only in their early 30s with a nice portfolio of properties as well. And basically, we did a new cover, helped them trim down some of the covers that they didn't want. Ended up saving them $3,600 annually. I mean, $3,600 annually might not seem a whole lot, but when we redid the home loan application, actually helped them increase their lending power by $200,000. So basically, having $200,000 more actually helped them have a way bigger selection pool when it comes to buying their third investment property. So they were actually really happy about the results. They actually ended up referring one of their family friends as well to me. I guess customers referrals honestly is the biggest compliment for me. That means I did the right thing, help the customers. I also had a case of being underinsured. So basically, customer bought a house 15 years ago, took out cover for $200,000 life insurance. Yeah, so he thought that was going to be enough at the time, which it was 15 years ago because houses were quite cheap back in the days. But then after some renovations in his current house and buying investment property, he now has a home loan of $1 million, around $1 million. So basically, but his goal is still to pay off the mortgages, maintain the same lifestyle for his family and the kids. So we ended up topping up the life insurance by $800,000. Which he was very happy about because now it actually helps him with his insurance goal as well. That I think being a financial advisor, not only do we have to listen to the client's needs and tailor make a package for them, I think the biggest aspect is about reviewing customers' ever-changing life circumstances. I always tell my clients to, I'll call them every 12 months anyway, but I'll always tell them to sit down with me and give insurance advice every 2 years' time, just because if you think about it, in the last 2 years, I'm sure a lot of things have happened in your life. Obviously, not every appointment is going to result in something. I mean, I'm going to assess your existing insurances. We're going to see whether you have the right cover for yourself. If you do, we're just going to leave it the way it is. And if you do need any help trimming or potentially adding any insurances to cover the shortfalls, we can all help you with that. More than happy to. Yeah, cool. So now question and answers time. Let me have a look. But ACC also covers death fatal entitlement. Yes, that's right. ACC levy. I know a lot of people are paying actually a lot for the ACC, but we have to look at the occupation. So it depends on the occupation as well, because some occupations you will be better off getting income protection and lowering the ACC. But for some occupations, in some scenarios, it is better to have ACC. But also, if you think about it, ACC only covers for accidents. C stands for compensation. So if you ask me what compensation means, I'm going to tell you it sounds like a charity. So they decide to whether they want to pay you or not. So, but our income protection, as long as this is a grade, we always pay. And most of our income protection, it doesn't offset with ACC anyway, which means if ACC pays you, we pay you on top. So you'll be better off anyway. But that's case by case. We have to sit down, Daniel, and see what you've got and see whether ACC is a better cover for you or whether income protection is. Yeah, does that answer your question, Daniel? Death fatal is paying to family if they die from accident. So the example you used. Oh yeah, ACC might have paid him. I don't know. I haven't read the news. I mean, the news only said they didn't have any income protection. Yeah, so that case, especially the second case, I think the wife was on work visa or visitor's visa. So then that goes down deeper. We have to talk to ACC about that. Yeah. And I think ACC only pays a kid until 18 years old as well. I'm not sure whether having work visa that does affect anything. We have to talk to ACC about that.
I think with the ACC payment, it does go down to the deceased, their previous income or something. I think they kind of link it to their income, right? Even for the life cover, like they pay out, and also it's not a lump sum they will get. They will only get a payment. Was on a weekly basis or something, Hans? Yeah.
Monthly or weekly?
So actually, you're not going to get a lump sum to pay the mortgage off and things like that. Yes, I think you do get some help from the ACC and maybe the funeral costs and things like that. But in terms of the a lump sum payment, the ACC is not going to do a lump sum payment, so it's a bit limited. I think ACC it's a pretty good in New Zealand. I think New Zealand is the only one have ACC set up compared to other countries. Yeah.
And also, like I said, I mean, insurance is not only covering when you pass away. Also happens when you were to live, and then if you were to suffer a illness where you couldn't work, obviously ACC doesn't pay you. Like I said, ACC stands for accident compensation, so only pays you in the event of accidents. So illness cover, last time I checked, that pays you about $90 a week, which is pretty hard to survive on in Auckland. Lamar, does COVID pandemic cover income protection in the event of redundancy? Yes, it was paid out. I mean, I did have a client redundancy, it was paid out, but then they got it prior to COVID-19. So we have to judge case by case, because some companies, they do have a provision saying COVID is not going to be, it's going to be excluded. Yeah, so it's case by case. But I've seen customers who bought a redundancy cover before COVID got paid out. Yeah.
And just like bear in mind that with the redundancy cover, they do have like a 6 months stand down, and also like how long they're going to pay you. And also there are conditions there that you need to be actively looking for work and things like that. Yeah.
And especially with redundancy cover, I think like it says that means you don't find a job within a month's time, the 4 weeks wait period, initial first 4 weeks wait period. But a lot of people who I'm sure with your expertise, you'll be easily finding a job within that 4 weeks anyway. Yeah. So yeah, case by case. How much do you pay job loss or redundancy pays, and will differ with different insurance companies? Yes, depends on how much you're making, but I think most of the times, the max that they pay out goes up to about $4,800 a month. So it is not to make your life better, but it is to help you go through those rough times and maintain the same lifestyle. Yeah, until you find a job. Yes. Does that answer your question, Dex? What happens if my employer pays me 3 months redundancy pay if I have insurance? Okay, so it depends on what sort of insurance that you have, because some companies, they do have offsets, some companies don't. So like I said, Daniel, it has to be case by case. Feel free to give me a ring or send me an email. I'm happy to send you some benefit sheets and we can discuss. Yeah.
I think will be quite beneficial. Maybe just have a chat with Hans, and then just looking at like what situation that you have, and then he can just give you some options, some advice before you actually decide what to do. Yeah.
Yeah. Give me a ring. More than happy to sit down for a coffee or something. We can have a chat and see whether what color suits you and things like that. Yeah.
I guess you guys probably understand, like, in terms of our business, we actually have like services we provided. So we have completely free services and mortgages and insurance. So this is all completely free, for you, because the banks or insurance company, they will pay us commission. So basically we're working on, for your interest. And also we have other services, which is like property mentoring services. And this is like, will require the customers, their investment, into that. But our mortgages and insurance are completely free services for the clients. Yeah.
Yeah. Yeah, like I said, I mean, if you do have a policy where you do want me to have a look or explain to you what they're exactly covering for, feel free to give me a ring or just, yeah.
I think very often that because obviously like we've seen quite a lot of customer, like obviously you've seen people that they are underinsured, but on the other end, we also see a lot of people overinsured, especially some customers, they kind of on the way already kind of build up their property portfolio, and then they were still paying like $1,000 or like I think one time I come across clients paying $1,400 a month on their insurance, which they didn't really need. Yeah. So it's very, very important because your scenario does change, like your personal situation, your financial situation does change, along the way. So do actually get a review done. Okay. So I think that's pretty much that we cover for today. I probably will give you another probably a minute or so and see whether we got more questions. Yeah.
Cool.
And for some of you, if you are following us, we also have a upcoming event next week, and so I'm just going to posting this one in the chat box. So we got some upcoming event coming. I mean, this one is actually next Wednesday. So we will be doing the update, mortgages and insurance update. So I'll be doing the mortgage update, and Hans will be doing the insurance update. So that's next Wednesday. It's a Facebook live stream. Yeah. So you would like to actually join our Facebook group. So we've got a group there. It's called Mahi, which is money. What else? Mahi, yeah. Money, homeownership, and like investing in Auckland. Yeah. Okay. So that's a Mahi group. Yeah. Okay. All right. Daniel's got another question. Is there any business insurance advice? Yeah.
Hey, Dan, can you give me an email or flick me a text? I'm more than happy to see you sometime next week, and then we'll sit down and answer all of your questions. All right, Dan?
Yeah, because I think it's quite broad there that you got people and you got like shareholder.
Yeah, just because a lot of things are case by case as well. So, what happened? Did I drop off?
Okay. So any more questions from anyone? Okay. Yeah. All right. Yeah. So I'd like to, thank you. Oh shit.
I think I'm dropping off, Lucia. Can you hear me? Hello? What happened?